Hi, this is Loral. Welcome back. This is our fourth of our four-part series. We're going to wrap it up today. You'll be setting an appointment with Jason if this is something you're interested in learning more about. This is something that's been here for 200 years. Give a listen. How long has infinite banking existed? Believe it or not, for more than 200 years. Today, I'm going to talk about three things in this video. What is infinite banking? Where did it come from? How did it all get started hundreds of years ago, when most insurances don't even have existed? Number two, how the wealthy have used them for generations. They have used them to become their own bank, protect their assets, have huge liability advantages and tax strategy advantages. And number three, what does it mean to borrow against your life insurance policy to buy things like LLCs loaded with real estate, other assets that are appropriate? So this is a big team effort. I have an expert with me today. His name's Jason Henderson, and we're going to get into all of the nitty gritty. How has this been around for 200 years and so few of you have any of these policies? Hey, this is Laurel. Welcome back to part four, the finale of our conversation about how long has infinite banking existed. I want to go into some of the depth just to really provide in our final series. And again, if you've missed part 1, 2, 3, they have been the last 3 days. So just go back to my YouTube channel, click on the search bar, and it's Dr. Jason Henderson and Loral talking about infinite banking. You can search for it and just re-listen to it. And again, share this with other people. Like if you know that your parents might need this, your grandkids might need this, your kids, yourself, you're going to go to insuritysystems.com. You're going to get our report and schedule an appointment. Do it with you, do it with your families. Have this be part of that financial base that is so critical for all of you to get established. So specifically today, I'm going to talk to Jason about what is, again, the banking, where does it come from? The history is hundreds of years old. It has survived so many economic downturns, upturns, side terms, all of it. The wealthy have used for generational wealth, and they have used infinite banking. If you've heard people talk about it, the one thing I do want to add in here, Jason, I'll just have you talk about, is a lot of other wealthy people use what's called captives. And I just want you to give a distinction because that's not this. It's a little bit different. And how do you borrow against it? Like, how do you really use it as a bank? And you've used in the past conversations how you bought the office you're sitting in, how you buy vehicles, how you buy anything, really by putting money in the policy and then you borrow it back using yourself as the bank. So let's start with how long has it existed, just so we really, again, I want to anchor the certainty for those that are out there thinking, how do I do this?
So the foundation contract has been around for almost 200 years. And the ability to use that as a banking system has always been in the contract. When you read the contract and understand that, it's there. And for many, many years, it was a savings vehicle. Whole life insurance was a savings vehicle. And everybody knew that the cash value was valuable and it could be accessed. Let me give you an example. The movie that's on every Christmas time called It's a Wonderful Life, right? And there's a disasters at the savings and loan, and he's all crazy, and he goes to Potter, and Potter says, well, what do you have? Basically asking him what his assets. And he goes, I don't remember the numbers, like $600 in my life insurance policy. And Potter says, well, you're worth more dead than alive. And that's where he gets the idea to go jump off the bridge. However, that is an evidence. I mean, that was filmed in the 30s, right? It's a Wonderful Life was filmed in the 1930s, and people understood at the time that's exactly what was going on. It's been around for a long time, and yet it has not been described as being your own banker until about 1981, 82. That's when the term was originally coined by Nelson Nash, who eventually wrote a book. I mean, he's the originator of the idea in more in scale than anything, because he showed people, look, you want to get as much of this as you can. And that's one of the issues we talk about in our free report and at insurity.com. You want as much life insurance as you can get so you can stuff money there and have massive amounts of wealth off the IRS's radar screen.
Oh, describe that. That's like a huge, we haven't talked about that in the past videos. So how does it stay off the IRS? I must just say, just the revenue and wealth stream. That's critical, I think, for the due diligence and the existence of these policies and contracts.
Well, as we said earlier, and you said it, that's been around for a couple hundred years. That means the contract was around before the IRS code existed. And so when they started to invent this new code, how do you handle this contract, this private contract, right? The IRS and the government doesn't get involved in private contracts. And that's what this is a private contract, a unilateral contract between you and people of like minds. And collectively, you own the company. Now, you say, how do we use that? Well, let me give you an example. There's some very, very wealthy family that starts with an R and it ends in feller.
Yep.
That have used this contract for generations to pass on generational wealth. And part of that is that when someone grows up, they don't go to the bank on the corner, whether it be Wells Fargo and Bank of America, to get a loan for their education or to start a business. They borrow it from the family bank. And then they are obligated to pay back the family bank or the family coffers, the family cash or whatever, principal and interest. So they are learning sound financial principles, which eventually builds the family wealth. Part of that, the family will also buy a life insurance policy on the borrower in the event they pass away. So the family wealth is made whole in the case they don't get it all paid off. And what happens when they don't pay back the loan they borrowed to start the business or whatever? They get cut out of the will. They no longer have access to it, and neither do their kids. So generation after generation, as they're actually borrowing it and using it to build businesses, to buy land, I mean, vast tracts of land, think of the assets, not lazy assets, massive assets that family has. They understand what they need to do. And for the fact that it can be built off the radar screen of the IRS, the death benefit is 100% income tax free. They lock it up into other entities like that you teach about in other parts of this YouTube channel about LLCs and trusts and things, which is fabulous. People need to understand that. And in your book, absolutely, books, I should say, with that all in conjunction, that's where it becomes so fabulous and such a great idea for everybody. It doesn't matter whether you're way, way in debt or ultra wealthy. This is something that you need as a foundation to your financial well-being.
Well, and I think all of you that are out there listening, again, we want you to share this, click the subscription button if you haven't by now. Make sure you're getting notified every day. And again, I want you to share this with more and more people. There are so many people. Even take advantage of the appointment with Jason to talk about how you'd use it to get out of debt, how you'd use it to put, money in monthly, and then how do you borrow it back out to use it for other investments. So it's just this cycle of banking that you get within your own life. And a lot of you, you're stuck in one channel in one direction. So the more money you make, the more you can invest and the more you can put away. Is there any, give some ranges just from a perspective before we wrap up today and the part 4? I mean, can people put it as low as a couple thousand? Is it 10,000? Because again, I want to just reemphasize, you're going to become wealthy using this tool. You don't have to be wealthy to start having the tool and having these contracts.
So I'm only going to speak from my personal experience. I have clients that put in anywhere between $160 a month to $36,000 a month.
Wow.
Most of your listeners are going to be in that range. Can it be a little less than 160? Probably, depending on your health and age. Still maybe make it fly. This is for everyone. And for those that are really staunch about their rights and the blessing and the advantage of the United States and are against some of the things that the Fed has done with multiplying money and stuff, this is an answer. This is really sound money, this whole concept. I mean, it becomes something to where as a nation, we are not going to be prosperous until us as individuals prosper. And this is the stepping stone or the starting point for people to start to prosper.
And if the Rockefellers have it, I can promise you most wealthy families have it. So again, go to insuritysystems.com, grab our report. If you haven't, set up an appointment with Jason. If you've already had one and you didn't understand that there's a way that you could actually use it to offload some of your debt or restructure, have another appointment. Really start digging in now that you've heard the 4 parts and been thoroughly informed. Our report on insuritysystems.com will give you a whole nother perspective, and just keep leaning in and learning. So Jason, thank you for being here. It's been awesome to have you, and look forward to a lot of you getting this financial foundation. It's an asset. And I think so many people think insurance is a cost. This is an asset that you want to build your foundation on. So make sure, again, you go to insuritysystems.com and click on the report, schedule some time with Jason. If you have any questions, go to askloral.com, which is where we have all of our directions for requests or questions. And we have someone answering every day. Thousands and thousands of questions come in a day. And we have a huge team here ready to answer. Make sure you share this, subscribe. Every day, we're here 5 days a week. 10 to 15 minutes is all I ask for you to lean in and make 2023, make financial literacy, business literacy, insurance literacy important to you. We'll talk to you tomorrow.